Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Tuesday, 23rd of August, 2022. Futures must have had an economic release or something that I missed. Slightly red now. They were green last night, green overnight, green this morning, but are a little bit in the red. I think NASDAQ might be touching the green a tad. But either way, let's call it flat. And crude is up to 91.45. Ags are bid out there. Wheat and corn prices are up. Copper is up. Sad gold is up just a touch. Rates are higher across the curve. So not exactly a bullish setup necessarily. Maybe that's part of the problem. Don't know. But in terms of earnings, Palo Alto Networks, I want to talk about them. Cybersecurity, one of the strongest secular growth trends out there. Maybe potentially the strongest. All these surveys that people do about corporate spending intentions and what have you, cybersecurity is always up there towards the top. What are you going to cut back on? Oh, I'll cut back on XYZ, but I'm not cutting back on cybersecurity. You hear that time and again. Fortinet gave kind of a false start. Their quarter wasn't that impressive, but enter Palo Alto Networks. Let's just talk about their guidance, 940 to 950 in earnings versus 929 expected. That's for the full year. 6.85 billion to 6.9 billion in top line versus 676 billion expected. Margins are improving. They increase their buyback. They remain convicted in a path to 100 billion market cap in 2 years. Current market cap 51.2 billion, so that's a double in 2 years. That's their intentions. And interestingly, on the conference call, the company talked about employees that had left for seemingly greener pastures and are coming back. They went to startups, they went to competitors, whatever it was, didn't hold their attention. And they actually have a welcome home program. So this isn't like a one-off thing. There's a number of executives that are coming back to Palo Alto from competitors and startups. It's just pretty wild. The fact they have a program, I think, is really interesting. So the stock's going to, importantly too, the stock has just came down through its 200-day moving average back in May and has not reasserted itself above the 200 days since then, and it's just been kind of languishing. Today it's going to get a nice big gap up, 10%. It's going to open well above its 200-day moving average, so 200-day is around 529. The stock's going to open around 560. So I'd like to use the rule of thirds here. If you're uninvolved and want to get involved, I tend to buy all my stocks in pieces like this. So it would be potentially 1/3 today, and I would probably do it sooner than later. And then the second third, just over time. I mean, the volatility in the market is going to give you opportunities to buy this thing lower. So I would do that, and obviously look for it to hold that 200-day, really importantly. But this is a great setup. Premier name in cybersecurity, great guidance, stock buyback, all the things you want to see. I think they're even doing a split. So really interesting, love it. Not involved. We own CrowdStrike, Zscaler, and we own a little bit of Okta. But I may look at adding this in the not too distant future. Electricity prices in Europe have eclipsed 1,000 per barrel of crude equivalent. That might mean it just seems like there's way too much inefficiency in WTI of $91 a barrel. Maybe there's a catch-up trade there for crude. Just something to think about because that looks a little like an imbalance to me that might be met by the improvement of WTI prices over the short term. That's all I got. Have an awesome day, and talk to you on Wednesday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.